Wall Street executives tell Trump this is not 2008. Top Wall Street executives, summoned to a Wednesday meeting with President Trump, said that the banking system was strong and that the current market turmoil was not akin to the 2008 financial crisis. This is not a financial crisis. Citigroup's chief executive, Michael L. Corbat, told the president. The banks and financial system are in sound shape and the banks are here to help. The Bank of America chief executive, Brian Moynihan, agreed, saying, "We're very strongly capitalized. We are in a great position." Mr. Trump appeared to lament the end of the bull market. He referred to last week's jobs numbers as strong and said additional numbers coming in suggested the economy was still running smoothly. "Now we're hitting a patch," he said. "And we're going to have to do something with response to this virus. These stocks are the hardest hit." The worst performing stocks on Wednesday cut across industries, reflecting how broad the concern among investors was. With oil falling again, energy stocks like Apache Corporation and Occidental Petroleum led the slide in the S&P 500. Apache fell about 24%, while Occidental fell 18%. Boeing tumbled 18%, the biggest drop among components of the Dow Jones Industrial Average. A person with knowledge of the matter said the carrier planned to draw down a $13.8 billion credit line to shore up its cash position in the face of uncertainty over the coronavirus outbreak. Boeing also reported that it had lost more orders for its grounded 737 MAX. Boeing's top executives said in a letter to employees that the company was facing a global economic disruption caused by the outbreak. As a result, the company is limiting travel and discretionary spending, restricting overtime and freezing hiring until further notice, they said. And companies dependent on travel and tourism continue to fall. Norwegian Cruise Line fell 27%, and MGM Resorts fell 13%. Earlier Wednesday, the Global Business Travel Association said the coronavirus epidemic stood to wipe out more than $820 billion in spending on global business travel. Steep sell-off highlights fears that Washington's response won't be enough. Stocks plunged on Wednesday, with the Dow Jones Industrial Average falling into a bear market, in a drop that reflected investors' fear that Washington won't be able to muster a response to the economic crisis triggered by the spreading coronavirus. A bear market begins when stocks have fallen 20% from their high. Though it's a somewhat arbitrary threshold, in financial markets the designation acknowledges what many investors are surely feeling, that fear-based trading in the stock market may not end soon. The last time stocks in the United States were in a bear market was during the height of the financial crisis, more than a decade ago. The S&P 500 fell nearly 5% on Wednesday, while the Dow dropped nearly 6%. From its February high, the S&P 500 is down 19%, while the Dow is down 20%. Asian markets followed Wall Street lower on Thursday, with losses steepening after President Trump suspended travel from Europe to the United States for 30 days. Shares in Tokyo fell nearly 4%, and Hong Kong opened 3.3% lower. Losses in Australia also accelerated, and its main stock index was down nearly 5% by midday there. Drooping crude oil prices also worsen. Futures tracking West Texas Intermediate, the American crude benchmark, were down 5% to about $31.30 a barrel. Treasury bond prices rose, sending yields lower. Futures markets were predicting a sharp drop on Wall Street on Thursday morning. Stocks have whipsawed this week as investors vacillated between the threat that the coronavirus poses to the global economy and the hopes that governments around the world will unveil a series of measures to help businesses. On Wednesday, World Health Organization officials officially designated the spread of the coronavirus as a global pandemic. President Trump has signaled he would consider ways to stimulate the economy, and lawmakers and administration officials spent the day Wednesday outlining their possible steps. Options include cutting payroll taxes and extending the American tax filing deadline past April 15. But so far, the White House has not announced any specific measures, and most experts say a payroll tax cut is not an effective way to combat the problems facing the economy. What we've seen over the past 36 hours is hope for something from a fiscal policy perspective and then this sense that it's not going to come, or it's not thought out, so I think that's the disappointment right now, said William Delache, an investment strategist at Baird, an investment banking and money management firm based in Milwaukee. That the virus is unlikely to prove fatal to the vast majority of people who get it offers little comfort to financial markets. Rather, the worry is that efforts to contain the spread of the illness caused by the virus are certain to slow the global economy and corporate profits.